effective tips for financial planning. Financial planning is the systematic and orderly planning made to achieve certain financial goals in your personal life. Many of us may find it a very difficult or confusing concept, but it's really not the case. It may seem to you that financial planning involves a lot of paperwork, a lot of time, and a very complicated process. So, you choose the simplest fixed deposit, FD, or some insurance plan, and due to this wrong notion, you miss out on some very good savings or investment options. We will give you some simple tips to help you understand the investment options you need. 1. Creating a personal budget. Whether you have a job or a business or work independently, at the end of the month, you have to compromise on expenses. Or after paying the loan installments and spending on your needs, if you don't have any money left, then you have to understand that you are using your income without taking into account any unexpected expenses. That doesn't secure your future. So, creating a budget is the perfect option. It involves considering the income and expenses, saving options, prioritizing the expenses, and preparing for unforeseen expenses, which is the first step in financial planning. 2. Savings. In a financial plan, saving means systematic saving. This does not mean saving a certain amount every month. The ideal ratio is this: whatever is the amount that you need to spend per month, you have to have 6 times of that amount in your savings account. That means if the monthly expenditure, including household expenses, medicine and education expenses, etc., is rupees 25,000, then you should have at least 1.50 lakh in the savings account. This amount is not meant to help you in times of difficulty, but to take care of just household expenses if there is a break in the regular monthly income coming from a job or business. A simple theory is stated to create this amount. Save at least 10 to 20% of your income each month and create 6 times that amount. 3. Debt repayment. Remember, if you have taken a loan, that doesn't mean that you have committed a crime. Don't feel burdened with a loan. Even that is easy to manage. Classify your debts. Consider on which loan you have to pay a higher interest rate. For example, home loans are cheaper while you have to pay a higher interest on personal loan. At such times, the first thing to consider is how quickly can a personal loan be repaid. For that, check with expenses can be avoided in the personal budget that you have prepared earlier. Avoiding or compromising on an expenditure does not mean you are being stingy. Do not regret it. In fact, from it, you are repaying the loan, which can give you financial freedom. Before starting any new investment plan, please do consider whether that money can be used to repay a loan. 4. Buying insurance. It is often seen that multiple insurance policies are bought to get tax relief. People buy 10 to 12 policies at one time and keep paying the premiums. While insurance may be appropriate to ensure security, instead of investing in many insurance plans, you can always consider other options. According to insurance experts, the earning member of a family should have a life insurance plan with a return of 20% of his monthly income. This means that if both husband and wife are earning in a family, they must have life insurance. The children and the elderly in the family do not need to have life insurance, but every family member should have health insurance, including the children, earners, and the elderly. Everyone should have health insurance worth 2 lakhs. But if you cannot do it at present, you should buy health insurance of at least 1 lakh for everyone instead of not having health insurance at all. 5. Investing options. While understanding financial literacy, you consider many investment options which you had only heard about. Equity funds, gold, real estate. These are few of the options. Equity funds mainly consist of mutual funds or stocks. When you are not expecting returns in a short period of time, you can choose this option by properly studying it or by consulting an expert. For instance, you can consider it when there is still a long way to go for your children's higher education or marriage. Buying gold is considered a traditional and cultural investment. However, in gold, only buying jewelry is considered to be an investment. In reality, due to many factors like the making charges, reduction in the gold weight, you don't get the right returns. Instead, consider the gold bonds that are becoming prevalent today. As the gold market grows, the returns that are generated from it also increase. Real estate is also a great investment option. It's an immovable property. The idea is not limited to possessing a house in a city. The idea is to build a home of your own. If you have an ancestral house, investing in real estate is an option. An ideal investment theory states that 20% of the total monthly income should be invested. 6. Tax management. Tax management is perhaps very beneficial for those who earn at least 6 lakh a year. However, if the annual income is less than that, tax management is not specially required. However, some insurance plans offer tax rebates, home loans offer tax rebates, and some investment plans offer tax rebate. 7. Retirement corpus. Today's job structure does not include pension. That means we have to start accumulating it from now. You don't have to stress over it much. There is a very simple equation. Take an average of how much you spend today, after how many years you are going to retire, and what is the current inflation rate. Take an average of it and invest accordingly. Many banks in India have retirement plans. Besides, there are government schemes too. You should invest in them. So, we saw some common tips that would help you to do financial planning. The simpler the financial planning, the easier it is to follow. Another important thing is to keep the family members informed about all these documents and persons concerned with them. So, when you are not present to get the refunds, maybe you are hospitalized due to some illness, or someone else in the house needs money in your absence, or unfortunately something happens to you, then such money can be used at the right time.